Time to fuel your business success. Welcome to Harmonious at Lunch. We're bringing you bite-sized advice and expert conversations to drive clarity and growth 5 days a week. Make sure you join our Facebook group at humanoff.com/lunch, where listeners like you and our guests hang out so we can find harmony in business together. If you're building a business, you're in the right place. Let's dive in.
Welcome back into some more bite-sized business advice. Today's episode, we got a topic that I personally have never heard of, and I'm fascinated to dive in and listen with you today. We're talking about how to nuke your credit card debt, but not just paying it off the old-fashioned way. We got new ideas, fresh takes on things. I think that this episode is going to blow your mind. So, Tommy Kilpatrick, welcome to the show, and thank you for being here.
Oh, thank you for inviting me.
So when I was reading your bio and what you talk about before we started recording here, my first thought was, this is either going to get us arrested or it's going to be the greatest thing we've ever heard. And I'm open to either one at this point. But you tell me, I want you to introduce this topic, nuking your credit card debt. What is it exactly that we're talking about?
Right. And so I don't mind that at all, being accused that you'll be arrested. But you got to think about it. Is this illegal, what we're doing, or is what the bank's doing illegal? So I see myself like an accountant that has unveiled the criminality of the bank. So this is what happened to me. I'm an author, and I wrote a book on health and healing. And in 2004, I received a contract for an infomercial. And so I was test marketed on radio for about 6 months. And I lived off my 3 credit cards. And one of the talents got in trouble with the FTC about false claims of weight loss in his book. And that brought the scrutiny down on the company, and they canceled all the new talent. And so I was left with $85,000 of credit card debt. And I thought I was going to they promised me $100,000 a month. So 85 was just partly a month's pay. So I would have no problem. And so it put me in a tailspin, a little depression for about a month. And then one morning I woke up thinking about my dad was a CPA. I was in school to be a CPA. And I realized the bank did not have a debt. They had no invoice to claim that I owed them any money. And then I remembered in our banking class, we had read the Modern Money Mechanics, and the Federal Reserve put this booklet out. And it says what banks do to make a loan is you sign a promissory note first, then they write numbers into your free checking account. And if you look at the inflation rate since 1776, it was just flat until 1933. And I think that's when the Federal Reserve raised the interest rates, choked off the market, caused a depression to force banks out of business. And it consolidated their control. And then they implemented the fractional banking system, which is what they do is they sign a promise to pay, because that's what they can take you into court. Without that, they have no recourse because you didn't make a promise. So here you promised to pay and you didn't. Now they can come after you. So what they do is they write numbers into the account, and that causes inflation. So it's just been straight up ever since then. So that's what the banks do, is causing inflation. So I know they didn't have that because they didn't sign a promissory note. And then the third one is when you use the card, you agree to the terms and conditions. And people say, well, there you go. But my father-in-law at the time was an attorney and a judge, made long discussions about fraud undoes all contracts. So with that in mind, I filed based on watching some guy on YouTube years ago, how easy it was and simple to file a federal lawsuit. The judge was so nice to you and accommodating to the pro se litigants. I believed the guy, so I filed 3 federal lawsuits in Los Angeles. And after a while, because in my pleading, I explained everything what was going on, the criminality of what the banks did. And I was in negotiations with the attorney for the banks to do a deposition. And then all of a sudden I got called into court, like just out of the blue. So I showed up for court, and the judge ran me through some questions, and it made me look like an idiot, which I have in my book. And I have had this experience before. So he said, Mr. Kilpatrick, do you have a credit card? Well, no, it was a gift card. Pull your card out. So I pulled my card out. You know, you got to do what the judge says. And what's it say right there? It says credit card. Well, you got a credit card. You owe the money. Get out of here. So he threw my 3 cases out of court. So then I thought, well, here I'm going to get sued, 85,000 in debt. I'm going to lose everything. I just was. Then I checked a month later, and strangely enough, all three of those credit cards were off my credit reports, gone, and no 1099-C. That's important because when a bank loans you money, let's say $100,000, and you don't pay them back a penny, they notify the IRS through a form of a 1099-C, and that says you got income and didn't pay us back, so you need to pay taxes on that. Then the bank gets to do that as a deduction. So the bank never issued me a 1099-C. They did not take $85,000 credit card debt off their taxes. So we know right there it wasn't truly a debt. So that's what I did. A friend of mine gave me a charity that was kind of inactive. I turned it into a credit repair kind of a charity, but a lot of people had credit card debt. So I'd write a letter to the bank explaining the fraud, and they never heard from them again. But the ones that had higher amounts, 20, 30, 50, 100,000, they would push back. And that's when most of my people would represent themselves. They didn't have a problem. It's the ones that refused to go into court by themselves. I had to hire an attorney. And then at the last minute, everyone's attorney stabbed me in the back, pulling out of the case. It's like, oh, yeah, I can't say this in front of this judge. I got other clients. He'll look like I'm an idiot. But I just realized just recently I was going to have a podcast. I was a guest on for a legal show. And I realized that if the attorney was in the same position I was in, he would look like an idiot. And a judge, as I say in my book, would look like he's going to be disbarred. So that's where I can kind of see their hesitancy in this. So that's when I kind of lightened up a little my anger about the attorneys who stabbed me in the back. If they went into court, they'd be tossed out too. So that's basically the story is how you can, from my background, so what happened to me is I didn't have to pay because it wasn't a debt. So,
Yeah, which is fascinating to me. And you mentioned this before we started recording. You said it's only certain credit cards, bank issue credit cards. What does that mean? So if someone's listening right now,
right.
we're thinking, okay, I have credit card debt because we're most of the listeners are American citizens, definitely have money on their credit cards. It's just what we do best. We spend money and keep debt. Outside of that, okay, I'm running my business. I have credit card debt. Now this guy's telling me it may be fraud, but by the credit card company. And if it's weighing me down, I may be able to get out of it. I'm not advocating, don't hear me say this, listener, to go just write off all your debt and spend money freely. That's not what I'm saying. But if it's burying you, this is potentially another way out. So, Tommy, back to the question. You said it's only a certain number of or a certain type of cards. Explain what you mean by that.
Right. So when you say you have credit card debt and you go into court and say that you've got a debt, you can't get out of it. Okay, because you're admitting you have a debt. Now, we're watching TV and we see a bank robbery, and the news always says alleged, even though they dropped their wallet, even though you open it up and see the guy's name, it's always alleged because you're assumed innocent until proven guilty. But if you just add that one word, then how can I nuke my alleged credit card debt? Now you're forcing the bank to come forward with their claim of a debt and their evidence. Okay, so there are true credit cards. And for example, let's say you need tires. You go to a tire store. It's their tires. They bought them. And you say, I don't have any money, but I will have some money in a month or so. I have a refund check, or I've got a paycheck, or I got a bonus coming. So I can pay you. I just don't have it now. And I say, well, why don't you apply for that in-store credit card and see if you're approved? Hey, you are. And it's great. They put $1,000 of tires on your car, they balance it, and off you drive without paying. But they have an invoice. Okay, the invoice is a critical thing. I'm not talking some wacky, weird thing. This is basic accounting. So any CPA, anyone who took an accounting class is going to agree with me. So I want to say to your listeners, don't believe me. I'm a doubting Thomas. I want you to doubt me. I have links in the show notes. I want you to check out those links so you can see what I'm talking about is the truth, and have this podcast sent to your CPA and have them tell you I'm actually 100% right. Okay. So a store you owe that money. You can't get out of it. It's an invoice. They have the date, they have the tires, they have the size, they have the taxes, they have the labor, they have it. And you have an unpaid outstanding invoice. Okay. Now, look on the back of your Amazon, Walmart, store card, anything like that. And it says issued by Bank of America, Citibank, Wells Fargo, Deutsche Bank. This works everywhere in the world, not just in the USA. So if that's the case, then this is an alleged bank issued credit card debt. So that's the critical thing in knowing that we're differentiating a store card that you owe money on, and this is not a way to get out of it. This is a real story of what the banks did to you. So that's what you want to do is look at the back of the card. And if it's issued by a bank, then you can challenge this with the bank.
Okay. So assuming you did not actually purchase something that's tied to an invoice and it's just a regular credit card, like you said, Amex, Visa, MasterCard, Capital One, and it's issued by a bank, this applies. That's helpful. So what's the next step? You said you'd have to write a letter to the bank or the card issuer. What does that look like? And you also said this can be done within 45 days. I'm curious what the process looks like, assuming, okay, everything lines up, we're in check so far. Now what?
Right. So before we step into the next part of what the bank is going to argue, and I'll answer your question in just a second, we have to fully agree that the bank does not have an invoice. They do not have an invoice. They did not put tires on your car. They didn't do that. Then you're going to say, oh, they did a loan. Okay. So let me ask you a question there, Brandon. When you apply for a loan and you're turned down, do you still get the loan?
No.
No, you don't get the loan, you're turned down. But if you get approved of the loan, then what do? You go into the bank and you fill out loan documents. You have to provide proof that you have an income because the bank cannot be accused of predatory practices. They've got to show the court that they've actually did their due diligence and make sure that you could actually pay this back. So they ask you for proof of evidence of income. You also have to put up collateral. You have to put your house up, the car, or if you go for a personal loan, there's got to be something the bank can take away from you and then sell it to get their money back because there was a loan. They just can't do that. They have to have some kind of collateral. Then the other thing they do is they need a credit report to show your history. Your credit score indicates the amount of interest rate you're going to pay. But the last thing you have to sign is a promissory note. That's the critical thing. When you sign the promissory note, you're promising to pay them back. So this does not get you out of a loan for a mortgage. It doesn't get you out of a car loan, doesn't get you out of a personal loan if you sign a promissory note. So with that all being said, all you have to do is write a letter to the bank, ask them to close your free checking account that's associated with this card.
It sounds
Brent,
so.
you're going to say, I know. You're going to say, what checking account? Okay. What the banks do is they're all about loans. So if you have no money and you walk into a bank, you're going to walk out with money. And how you do that is with a loan. Now, the other side of it is when you take money to a bank and you put money into it, it's actually considered a loan to the bank, right? So banks try to get you as a customer and they spend money. They have a budget. They have advertising money to spend to get you as a customer. Years ago, they would buy a toaster and give it to you. They would buy a wall clock and you come into the bank, open an account, and they would give it to you. There was an ad once in the paper that said, come into our bank with $25, keep it there for 90 days, and we will match the amount. So on day 91, I went into the bank, took out $50, closed the account. Let me ask you a question, Brandon. Did I rip off the bank? Did I steal from the bank?
No, that was their promotion. They promised it.
I fulfilled their requirement. They gave me the money. It was legal, morally, ethically correct. That's exactly what they did when they sent you a $500 credit card. It's disguised as a credit card. It's a true gift card. So think about it. You applied, you were approved, and they mailed it to you. We use the word gave. They gave me the card. The card came in the mail, and that's called a gift card. So what did you do with your gift card? You went to Home Depot. You bought a toilet, a golden throne. So you're walking out with the golden throne, and the guy at the door said, wait, did you pay for that? And what do you have? You have a receipt. Let me ask you a question. Are you going to get a statement at the end of the month with an outstanding invoice from Home Depot? Are you going to get that?
No, but you are going to get a statement
No,
from
no,
your credit card
because
company.
they were paid. Well,
Yeah.
who paid them? The bank. Where did that money come from? It came from their advertising budget. Okay. Just like they get a wall clock or a toaster and they gave me $25. They do this as a promotion to get you as a customer. So what you do, you think you're doing the right thing. You want to be moral, you want to be right, and you write out a $500 check and mail it to the bank because that statement made it look like a bill. Now, let me ask you a question. You remember years ago, we used to get a statement every month in the mail, and now it's by email, and a lot of times we don't even look at it. But every month we get a statement from our checking account. Now, is that a bill?
No.
No, that's not a bill. It starts the beginning balance, what I deposited, what I paid out, my checks and debit cards, and other fees, other charges that happen, and that's my ending balance. That's what it is. The same thing in accounting is that is not a bill. A bill is from an invoice. So a statement came in, you wrote a $500 check out and mailed to the bank. That technically is a loan. You put the money into a free checking account, and every day you spent that, it lowered the obligation the bank has to you on their loan because you spent it. And rightly so, it's your money. So every subsequent purchase by you has been with your own money. You have been depositing money at the end of the month, and they make you pay interest if you didn't fill it up to 500, their arbitrary amount. So that's where they charge you fees and late fees, annual fees, all these fees add up to on average. And I checked this out about 2 months ago. You can type it online and say, what does a bank averagely make on a card? And it's $23.04. So if a bank has 1 million card holders, they're bringing in $23 million a month on a scam. They are cheating and they've lied to you. This is not a debt. So it's a free checking account, and it's your own money, you have spent it. So the letter, first of all, says, I want to close the account. Now, here's the thing. If you go into a bank and close an account, they say, oh, here you go, sir. Here's what's left in the balance due. And now we have a zero balance. Now we close the account. Not with these. The banks will steal your money. So you need to close, you need to withdraw your money. You have been paying every month. That money is yours. They call it available credit. No, it's what's available to you that you can use because it's your own money. So you need to withdraw that money first before you write this letter, or they're going to keep your money. So I call that theft. So withdraw the money, then write a letter to the bank saying you want to close your free checking account associated with this. And that's the weakest. Now, if you want to add some power to that, have your CPA write a letter saying, first of all, the bank does not have an invoice. There is no debt. Two, since there never was a promissory note, it's not possible for them to have issued you a loan because you didn't sign. You have no documentation. And then you have your attorney, and there's an easy way. They sell $300 for a letter, I know, but there's a thing called Legal Shield, and for $29.95, you can have this for 1 month and then quit. You don't need to do it every month. But an attorney will write the letter to the bank saying fraud undoes all contracts. It has been repeatedly over and over again. The Supreme Court has ruled that they cannot be involved in a crime. You can't bring a criminal, your criminal activity to court. They'll throw it out because if you're committing a crime, you don't get to play the game of that's a contract. So you don't have a contractual agreement with the bank. Now, if you have a higher amount, you do what I did is you file a lawsuit, not a federal, a state, but you don't even file it. Okay. Make it look like you did. There's no docket number. Okay. So you fill out the complaint, you lay out exactly the scam that the bank is doing. You also put in there that if you send me a 1099-C, I'm going to file a 3949-A with the IRS. And that's a form you file to notify the IRS of fraudulent activity. This is fraudulent activity by the bank. They are committing tax fraud by making a claim on a loss when they never had a loss. It was your own money they stole from you, basically. And now they're making a claim of a tax deduction. So you will not get a 1099-C at all. And then what you're going to ask for is for them to remove it off your credit report, right? Very simple. Now, here's the best part about it, is that in that complaint, you include the discovery. I have all the stuff all done and out for you. It's always simple, but you ask for production documents, interrogatories, which are questions, admissions, but you want the deposition. You plan, anticipate, still, it's not even filed, okay? But you plan, anticipate them respond about 20 days, and in 10 days, you can have a deposition. So in about 30 days, you give them like 3 dates. They like that. So once the bank receives this, they're looking at, oh my God, if we respond to this, we're going to have a deposition. Someone in the bank is going to have to swear they're on a Bible saying that you have a debt, and we have evidence. We have an invoice, we have a certified copy of the promissory note, and you've got someone who's going to swear that you have a debt with a bank. Now, that's going to put shivers through it. But here's the best part, is the injunction. So when someone's bothering you, you can go into court and say, Judge, this person's harassing me. They say I owe them money. They're coming after me, debt collectors and all that kind of stuff, but I don't owe them anything. And that gives the other side a chance, 30 days, to bring to the court evidence of their debt. They would have to have an invoice, a copy of the promissory note. They'd have to have somebody that's going to swear that you owe money, and they can't do that. If they can't do that, now they're in contempt of court. So when you send this to the registered agent, they're the person who receives all the lawsuits. You send this brick. I want to kill a gnat with a cannon. And so when the attorney looks at this, the bank attorney, they're going to go, this is going to be 40 hours of my work at $500 an hour. That's $20,000. We're looking at $50,000 just to get the thing started. And now I've got a deposition in 10 days. This is not the best way to go, bank. You better bail out. All they want is it clicked off their credit report. So that's all they're going to do. One click, it's off your credit report. And that takes about 30 days. So figure 30 and 15, about 45 days. Look at your credit report, and that should be off your credit report. That's what happened to me. And
this is
about
crazy.
1,000 people I helped over the years.
Yeah, I mean, it's fascinating stuff. And I've kind of dug into this world in other areas, not with credit cards, but with how banks work and the Federal Reserve and loans and all this stuff. And once you open the can of worms, I promise you there's no going back. So it sounds like you've done the same, Tommy. You said you had links to these resources. What was it, on your Facebook page, website?
I can send it to you in your show notes. And
Perfect.
The first link is just that banks do not make any loans. And the second link is about how they have to have a promissory note. And the third link is about the law that Supreme Court's ruled over and over again that fraud undoes all contracts. Now, the fourth one is a fun little guy on YouTube. He says, do this. I've made $361. You deposit money into banks. They match your money, wait to the term, and then close the bank out. And that's how I made $361. So people know that you can do this to a bank, and the banks are well aware of this. It says my knowledge is about the credit card is the same thing as that.
Yeah, very interesting. Awesome. So for those of you watching, listening, it'll be down below. Those links will be down below in the show note. We'll be sure to provide those. Tommy, thanks so much for being here.
Well, thank you very much.
And for the listeners, I hope you enjoyed this episode. I hope it made you think a little bit. If you think we're crazy, maybe we are. I don't know. I'm on Tommy's team on this one, so we're both crazy together. But expand your mind. Expand your knowledge and your resources of what's available to you. That's the only way you grow and scale your business. We'll see you on tomorrow's episode of Harmonious at Lunch.
Another episode of Harmonious at Lunch in the books. I hope this episode made you think and you grabbed some actionable ideas to propel your business. Don't forget to like, comment your takeaways, and subscribe wherever you're listening so we can help more entrepreneurs just like you achieve harmony in their life and business. For cutting-edge tools that bring clarity to your people and processes, check out humanoff.com to download our app today.